The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. Dow's down 17, S&P's Dow's at 21,624, S&P's at 2474. The comp index, I've got this 2-minute chart overlapping the numbers that I'm looking at. So let me just show you. This is a 2-minute chart. It made a decline at about 10:15, had a sharp decline from the 2474s down to the low of 2465.50. 2-minute chart in the E-mini. In leg C, in the Chapman wave, MACD is good, stochastic is good. I'm going to talk about this. This is exactly the pattern we want to talk about today in many of the charts. There should be a leg D, and that leg D should come in. So that is at 2474.50, and that should come in by 11:16 today. Let's see what happens and see if this is going to work out. Now, a couple of things. EUR USD. Look at this. The euro dollar is in leg D. We spoke about that. I spoke about the closer you get to the 200-period exponential moving average of 1.16. It was in the 20s. Now we're actually trading at 1.1631. The closer you get, the greater the chance. Let me just open this up today. I want to open up charts so you can see what I'm looking at. See this arch formation that goes to a lowercase m? And the second time it goes down to 1.033. The low before was back in March of 2015 at 1.046. This pattern in the Chapman wave methodology, my CD introducing the Chapman wave methodology, I talk about this kind of pattern, goes from a lowercase h to a lowercase m. When it breaks out after a successful test, even if it goes below, if the MACD and stochastic on the second arch formation, if the MACD and stochastic are now much improved when it comes down for the retest, there's a real good chance that the price is going to bounce to the most important, either a moving average on the left or a spike high, and this would be the high of the week of the 11th of November 2016 at 1.298. If it takes that out, be careful, because it could very easily, and this is the pattern of this particular formation, it could very easily take out the left side arches on the left. First, the most important one on the right, that's this one right here at peak D on the week of the 6th of May 2016, but the initial one at a peak C that failed week of the 28th of August of 2015 at 1.171. Now we're above it, but when the EUR USD euro dollar currency pair broke down back on the 22nd of August of 2014 under the 200-period moving average, look how long it's taken to break. But the closer you start to get, the better the technicals, the greater the veracity of the move. And if you look at the monthly, that was the weekly chart. Look at the monthly, a single leg A to the upside, breaking to a new recovery high if it takes out 1.171, the high of August, that was August 22nd of 2015. Now, the reason why I want you to bring that up is that earlier today, the dollar suddenly looked like, ooh, nice bit of strength there. Hit the 9-period moving average and kapalop at 94.28, now down 55 cents. This is recycled. It's in G/C to the downside in the daily. It's in leg F in the weekly. And the monthly chart, we've still got that down arrow, which says the 103.82, the top of January of 2007, was a top. Now it's going to be a top of consequence. Why? Because the power of the move to the downside, look at these red candles. 1, 2, 3, 4, 5 red candles. Out of 7 bars since the January high, 6 have been red candles, and this is not, the month is not finished. So this is going to be very important, because the closer now you get to the downside, remember we were talking about the 200-period moving average in the EUR USD, now we're coming to the downside, and look what's happening. You've got the low that was made in May of 2016 at 91.92. That becomes a magnet unless there's a very sharp bounce in the weekly, and that makes the 96.50s has to be broached. 96.23, the 9-period moving average has to be broached, and you have to go above it and close to get a real change. Question of the day, Basil, looking at 1 year, are you a dollar bull or a bear? I'm anticipating that there's going to be a change of trend to create some kind of a rectangle formation which could form a right shoulder in the monthly chart. So my suspicion is that 2/3 of the move to the downside in the dollar's already been made. The big test will come in the 92s, and that should be coming over the summer maybe. I'm not sure yet, time-wise, because what we've got is a price time match on the left. That said, you've got, if you want a time match, you're looking at, I'll do it right now. The first time match would be right there to there, and right there to, I wonder if it's already past it. It must be close. Wow. Yes, it's already 1 week past it. So now I can, oh no, it's not. This is the week. Okay, very good. So this is saying that within the next week, the 93s is going to be incredibly important support for the dollar. 93.37 is the 200-period exponential moving average. That's going to have to be a chop, chop, chop. We should start to go chopping up and down in a sine wave formation in the dollar between 96, I don't know if we get to 96.20. Let's just say 96.50s and 91.30s is going to be the trading range, I think, for the dollar over the next 8 to 12 weeks. Yep, 8 to 12 weeks. It might be quicker if we break through this particular support right here of 93.02, the low of the week of 24th of June. Let's go on now with all these numbers, because I've got a lot of questions that I want to get to, a lot of things that we want to deal with. I'm going to also show you something else here that within the context of these markers, if you're looking at the USD JPY, that is the dollar-yen currency pair, it's coming down. It's at 111.67. And what it's saying is that 111.36 is the 200-period exponential moving average support. How it handles that is going to be very important. If you think chart patterns match and they replicate either inverted or in exactly the same profile, what we're looking at is this arch formation. I'll draw it in. Should become a arch formation, and that's the reason why I want to go to the dollar as soon as I finish this. The arch formation should become a lowercase h that goes to a lowercase m, and that makes the floor of 108. Let's call it 108 for now. 108, very important. You're at 111.68. It also says that the euro-dollar currency pair is going to have a tough time breaking to the upside unless 113.20 is achieved and held. You can't just go there and spike and come back down. Between 112.45 and 113.20, that's the barrier on the upside. We'll see what happens. In the meantime, back at the range, the monthly chart is just saying chop, chop, chop in this trading range between 115 and 100 and let's call it 108 for now, and 108 for now. Okay, the QQQs made a new all-time high today, and the QQQs in the single leg A. This is still, for now I'm just calling it a gray leg A to the upside, but it's a spectacular move. And I want to talk about the MACD and stochastic here. I'll be right back.
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White services. For all the details and to sign up today, visit the front page of TFNN.com.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Before I go on, let me just say, Sarah sent in 2 great comments about potential cartoons. One was just about 2 days or 3 days ago, where she said I should show a tombstone, and on the tombstone it shows the VIX index and it says rest in peace. I thought it was very good. And then last night she said, or yesterday she said, cartoon of the day, traders visiting the ICU with volatility in hospital bed. Can you draw? I probably could draw it. I just haven't done any drawing for quite a while, but yeah, it wouldn't take me long. But anyway, it's even better to just tell the story. Very good, very good. So yeah, we got a couple of questions. Let's go through these now. Let's go backwards. In the den, Ruby asks, Basil, Palladium, please. So Palladium, I went through this the other day with Mike. And Palladium Mike, we were looking at it together. And I said, yeah, really good candle, but it needs to break above the trend line. And that trend line then has to become important. But I also said the doji that's forming, this was 3 days ago, is very important because if the next day, because if the next day there is a red candle and there's a close below the wick low of the 18th of 924.80, this is the continuous contract, then the following candle is really important because the best case is that you see a break below, but a close above the, right at or above the doji open and close. That's like a plus sign, right? The plus sign of the 18th, and that says it opened at 934.40 and it closed at 930.30, so very close. So you want to see it 928.10. This is the best candle that you could get after the red candle of yesterday and earlier this morning being down in the 915.50 area. This is a fabulous comeback. But what's really important is that you see the trend line I drew in. This is my rule of thumb with the breaking of the trend line. That trend line has to now become support. No matter how high you go, if it comes back down, that's the line. So far, it's acting as, we can call it closing price support because it's not closed yet. It's still acting well, and you've made a long wick. You're way above the 9-period moving average. So, Ruby, what I'm looking at, if you're long platinum, I think you are, or you were, what I'm saying to you is this is the best candle you could get under the circumstances of having made 3 lower lows since that peak B high on the 17th of 937.40. You're still 9 points below that. So what you want to see tomorrow, and Friday being one of the strange days when it comes to commodities, very often strange things happen on Friday. You want to see a close, preferably above the wick of the 18th of 934.40. If in fact you go back down and you close under yesterday's close, which was 924.20, I'm going to say to you, whoa, now you've got to be careful. You're matching almost all the other weekly charts where you had a nice strong move up and then you just chopped around and went to lower lows. So be careful. At this point, this is the best you can expect for the candle. Unfortunately, we're only not even 2 hours into the opening of the formal session. So you want to see that. You want to see a close. If there's a close anywhere above 926, I'd say that's good, but you don't want to give it back a chunk tomorrow. In fact, at any point in the next few days, if it goes under 919, be real careful because you could very easily take out today's low. So far, good. The MACD is good. The stochastic's still good. That's the reason why I'm talking to you more positively about it with this kind of candle, because everything so far says, buying pressure, not selling pressure, buying pressure on the pullback. That's what you want to see. So far, so good. Next question I had was the QQ, could I show... what was the question? Oh, a question. Why am I calling this still gray leg A? Now, there are a couple of things that are going on here. In the semiconductor index, they led the way up, and in a sense, they led the way down. They've also had a spectacular rebound. The big thing is what's going to happen from here. When I look at the weekly chart, and that's the reason why I mentioned the SMH is because it's a big part of the QQQ, the NDX 100 power shares, trust series. This is an all-time high. The previous high of 143.90 on the 9th of June saw basically an A to B equals C to D. This is the classic lightning bolt pullback. Went to 135.80. What was the left side low that we were looking at right here? We're looking at 135.87. It took out that low, closed above it, and therefore that allowed for a push to the upside. Now this is what I wanted to talk about. I had a question from someone about the SMHs. Yesterday, I wanted to go long the Dow, and I wanted to go long the SMHs for a couple of reasons. The Dow needed to go to a leg D. Still needs to go to a leg D above 21,681. The semiconductors, the QQQs, and even the XLK, let me just get to the XLK, not as much because it's got IBM. I guess I didn't look at that yesterday. No, this is very much. 57.62 was the all-time high on the 9th of June. It's 2 cents below that at 57.60. Not right now, but it went to 57.60. So now let me go back. You'll see what I'm trying to do. I'm trying to place the technicals. I'm trying to eliminate any thoughts I have about up, down, anything. I'm just looking at the technicals. This sharp move up in the I'm going to make this a long-term chart. Look at this. You see this pattern where the stochastic goes sharply higher, and the MACD, this is the MACD here, the top one, has a wide expanding 9-period differential. And that differential, the green fast-moving average, is way above the red one. That's a very bullish sign. And if you get the stochastic powering into the mid-90% area, that's usually that says you could sustain the rally. And the reason why I'm looking at it so closely is that I never expected after the pullback that we had, even though I had a Chapman wave 5 to the downside in the Qs, I believe the SMHs, the SMHs, and I think, I'm not sure about the XLK, that's the tech sector S&P Select fund. I didn't expect that you would get such an outstanding single leg to the upside based on the stochastic going under 20%, and then to 97%. That is really positive. To get this particular index down below the 9-period moving average of 144.9, it's called a 142, you'd have to see that stochastic pull back to about 91%, 88 and 89%. And look what you've done. You've got 3 points to the downside. So it's going to take some news. Something's going to happen. Now, the other thing is, when I look at the pattern of the arch formation, breaking to a new low, and then rallying sharply, it's almost as if the decline, and look, the MACD and stochastic, everything confirmed it, the decline fulfilled most of the requirements for a pullback of consequence. So in the monthly chart, in the weekly chart, you've had 4 weeks of down move. You've not seen a 4-week pullback in the QQQ series until way back in April of 2016. I'll be back and we'll talk about it, and I'll tell you.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So before I get to a lot of the other questions, let me just do this here. In terms of pattern formation, this is the QQQ daily chart, could become just a cup formation. And what I would anticipate is if this is a cup failure, then I would not expect to see 96% in this stochastic. I would have expected 87%, something under, no, I'm sorry, 87, I meant 78. something under 80%, sort of flattening out, or a jump to the 96% level, and you have just 3 or 4 sessions in which the stochastic has to revert back underneath that 80% level. And I would say that within 2-3 days, it just has to be some kind of news in the QQQs, in the top players in the power shares, to pull back under that 141.90 area, 141.50. I don't see it yet because the stochastic seems to be flattening out at 96%. Let me show you the same thing in the SMHs. SMH is at 96.68%. It is flattening out, hasn't crossed negative. The MACD is still good. On balance volume is suggesting something's not quite right yet. And that's the reason why I think that the SMHs still continue to be one of the benchmarks that I'm looking at here. But as I look at it, to have come back from 80.92 to 87.56 so quickly, breaking above all the left side resistance levels, only with that very deep candle that spiked to 89.72 on the 9th of June and then reversed sharply. I just have to say, at this particular point in the SMHs, 86.29, you've got to see a close below that, and I'd probably say 2 days out of 3 you should be closing below it. So all of a sudden, the correction seems to have been just a mini correction in price, 8%, 9%, depends which index you're looking at, or even less, and then a rally back towards, in some cases, but in other cases like the Qs, to over the previous high. So I don't want to step in front of this potential freight train. Look at this pattern that we were showing here on the left. This is the thing that I'm talking about. If this is going to be a failure pattern, then the stochastic at 60.93 in the weekly chart has to start pulling back. And it'll only pull back if the daily chart starts to go to 88% and 85%. And that's not going to happen unless there's a reversal here that takes the SMHs not to 89.72, the all-time high, but instead below 86.20 over the next 4 or 5 sessions. So I just wanted to be clear. It's not what I anticipate in terms of the speed to the upside. But absolutely, once it's happening, you've got to respect that. To me, at least, remember, over 80% is good for the stochastic. Holding in the 90%, middle 90% area, that is excellent action. Question about Intel, INTC. I still think Intel has to wait. It's just not the place to be. If you want to really look at something, look at Applied Materials. Applied Materials, beautiful candle here. Leg B, all-time high was a peak F top in the weekly at on the 9th of June at 47.86. That is a spectacular comeback. And look at the MACD and stochastic, 98.34 for the stochastic. I just don't want to fight that. And all I can say is that my thinking here is that we have to let the upside play out a little bit more. I'm thinking that I should know by Monday or Tuesday if there's going to be a sharp reversal, that we've got that leg D in the Dow at 21,682 or higher. The S&P, you see, this is the problem. S&P is only in leg C. So that means if there's a gap down tomorrow, you can get a peak C, and that gives you Monday in which to pop to the upside. So MACD is good, and the stochastic's at 94%. I'm just not getting a sense now that I want to add to the shorts. I want to even go to the short side. Not right now. Maybe a little later, maybe by tomorrow afternoon, maybe by Monday. That's when we'll look at it. So I just wanted to clarify why I have no choice but to think this way. You've got Microsoft coming out with news after the bell. This is a leg E in the weekly, but it's a leg. This one, I've got an alternative count, F/B in the daily. And look at the daily. Look at the Microsoft, of all things. Look at that. What are they doing? That's so fantastic. All-time highs. MACD is good. Stochastic good. I don't want to fight this. I think it's acting well. I had a question about, hey, how come you didn't go short and then all of a sudden you go long? No, you didn't go long. Now all of a sudden you're thinking of the long side. I thought yesterday was a perfect trade to get the Dow. The Dow for the leg D. That's all. I thought that was important. Maybe I'll still think of that as a play. That's what I'm thinking. Okay, now I can get to the other questions. OIH. Nice action yesterday. Giving it back. It just keeps doing that, and it's on. The OIH is the Market Vectors Oil Service ETF. If you look at this daily chart, it's gone to a leg A, B. This is a leg B. And it's a fight. It's as if it's embarrassed to be rallying. That's what it really looks that way. But the MACD and stochastic are pretty good. I'm not sure what's giving it the heebie-jeebies today, down 63 at 25.59. But you remember what we spoke about? I said this long-term down channel, this is going to be the resistance, that dashed trend line. Watch it closely. So this is very important. The reason why I'm looking at these different areas as sectors is that I have a webinar coming up, and it's going to be about sector analysis. It's going to be about what was working and probably won't be working for the next few months, what hasn't been working at all and has a good chance of a rebound over the coming few months, and it's chart formations. And I'm going to be looking at chart formations that tell us what, like the lowercase h that goes to the lowercase m, as we saw in the euro dollar. This is the same sort of thing. Oil services, H pattern. There could be another arch, but it's the second arch test of the low that's going to be absolutely imperative if that's the case. So as it stands right now, would I be long? I'm avoiding this area just for the moment. Another week or two, this might be right on the list. But at this particular point, I think it's something to look at the XLE. I had a question about the XLE. XLE, same thing. Look at it. It has broken that trend line, but it hasn't held above it. It hasn't even held above the 9-period moving average in the weekly. MACD is making a slow turn to the upside. The stochastics is flat at 17%. That's just showing no strength at all. I'd just be somewhat careful about this whole oil sector. Next question was the trainees. I spoke about that yesterday to my subscribers. I said, you know what? We're keeping a really good eye on the trainees. If anything's going to pull us back to the downside, it's going to be the IYT, the iShares Dow Jones Transportation Average Index, trading at 170.44, down $1.98. And to my eye, this says this is a B, but I meant to do this before. This is going to be an E/B. Can I do that? Yeah, I can. I'm going to make this an E/B. Why? Because within the context of markets, this rally saw the MACD just barely bounce, and the stochastic bumped to 93% in the weekly chart, but it's arching over, and that's the pattern that I'm talking about. For us to see a failure in the SMHs, the QQQs, and the XLK, there has to be a failure within 2-3 sessions, and a pretty sharp failure. Otherwise, buying pressure, and that you can see in the VIX. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Yes, so Paul says, you talk of confusion is laughable. We're in the summer doldrums. Not much going to happen. It's a great time to not be in the market. If you told people this, you would be doing a better service to all. No. There are places to be. In fact, we have a couple of those that are doing very nicely. So yeah, no. Yeah, you can be out. That's no problem. But there are places to be. So we're looking at, just a question came in about U.S. steel trading at 23.89, down 58 cents. I think it's got a very quick peak A to peak B to peak C to leg D in the weekly, and it's just hit the 200-period moving average. I think that steel is going to be a steal, but later on. U.S. Steel X, I think it's going to be pulling back a little bit here. I'd be looking at it a little later on, and there's this huge gap. I think it was an earnings disappointment, usual earnings disappointment. That was on the 25th. The low is 30.05. It gaps down the next day, just a little bit, gaps down with a high of 24.37. I would say that a 5.5-point gap is a pretty big gap. So it's going to take us time to fill it in. 200-period moving average is at 25.62. You know what? If you're really interested in U.S. Steel, you can even nibble at a position here at 23.90, but my 22.50 to 22.20 is really the area that I want to be starting to have a good look at it. That's the way I'm looking at that. Next question I had was, H did that. Yeah, so the XRT, Home Depot, down 6.80 at 146.49. You see, this rotational aspect is so important. I had a sell signal. It was only, I'm giving it a best case scenario, calling it a C, but actually this is an alternate count. And I said that I'm going to have to maybe make a change. I needed time. Haven't really gotten back to it. But that peak C in the monthly is really an alternate count. It should really be, look, A, B, C. That should be a D. And that would be a peak F. And I'm thinking that Home Depot is telling us something that's going on about the building materials, appliances, home electrics, or whatever it is at Home Depot, that we've got to be really, I have no idea what the news is. I'm not even sure that they were supposed to give earnings report today. But look at this, right down from 160.86 back on May the 16th. I said this is very unusual. There's a gap up. I can't count it any other way but a C at an all-time high. It is so unusual. But I also said that that island reversal was really something that you got to take note of. If I didn't know what the letter was, I would have said there's D, E, or F with an island reversal. Then what happens, this is just typical, everything's going down, but there's that rogue wave that didn't see the sign of the beach that said high tide at noon, or at least high tide on the 16th of May. And instead, on the 20th of June, it has a spike to the upside and goes to 159.22, a point and a half away from the all-time high, fails and continues in the down mode. This says that Home Depot, this is a serious hit. You've got to take it seriously. And I'm going to be keeping an eye on Home Depot. I would not have been short right here. I actually would have, I was looking at it and I thought, the weekly is going to give me a signal, but I did not. If I didn't take that signal because of that darn peak C and the island reversal right there after the peak F, I just felt like I had to wait for a bounce. Instead, what we got is the bounce and a failure. Keep it in mind, Home Depot going down like this, I want to check it out constantly, because it's going to be telling us quite a bit about the home builders, etc. If you go to Amazon, leg C to the upside, all-time high, stochastic at 94%, MACD good, weekly chart is okay, technically not great, and it's just gone to the upside without the veracity of the technicals, but the monthly chart is still very good in leg G/C. I'm looking at this and I'm saying by Tuesday, I have a feeling we're going to get a tremendous amount of information. Maybe that's where we start to reverse to the downside. So I just have to give it time and some price. If you're looking at Netflix, which had that spectacular move to the upside, holding that, hasn't made a new high today, but that gap, I don't really have no choice but to call it an A. Is that just a gray A? Oh, I didn't explain why I wanted to call that a gray A. Let me go back, because this kind of fits in with my thinking. So the QQQ series had that big spike in a single leg up. 16 days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of continuous either gaps to the upside or new highs, green candles almost everywhere. And now today we might get a red candle, but it's still made a new all-time high. So now I've got the cup formation. I don't have a failure pattern yet in the stochastic and the MACD. What I am looking to see is if there is a pullback and then a brand new high for a new leg up, I'm going to have to call that B and say, you know what, we've got to wait for this to go to a C and a D. Reason why I called it a gray A, because of the single leg A. Even though it's gone, I have no choice but to call this an A. That was a G right there. And that lower 135.87, we went lower by 7 cents on the July the 6th at 135.80. That negated that as a buy signal. I could have gone A, B, C, C. Finally, we got our D. So there's a hint of that. I don't want to make it complicated. I'm just saying to you, MACD and stochastic are really outstanding. I don't want to fight this. I'm looking at it. I'm saying nice move to the upside. Got the technicals with it. I'm calling it a gray A. If it pulls back and makes a new leg up, it's going to be a blue B, and that'll be a hint that we should go to the upside. Yes, INDU. Look, this is a. No, it wasn't. No. No, it doesn't work. I think this is, if you want to look at the IWM right now, leg D, this is an official leg D to the upside. No other count that I can, this is fine. Leg F, maybe it's an F/B in the weekly, but I'm calling it F for now. That's IWM. If you go to the New York Stock Exchange, NYA.X. Leg E for the New York Stock Exchange in the daily. So you can see, you can understand why I'm saying that there's a chance that we have what we had in 2000, in December of 1999 into 2000, January, February, March, where the Dow stalled on January the 14th, I think it was, never made a new all-time high, but the S&P and the Qs went on, NDX 100 went on independently. We might be in that situation right now. So all I'm saying is going one step at a time, looking at each sector individually, and that's what I'll be talking about in this webinar. This webinar could be really important in terms of, and I've already started for subscribers. We've been going into areas that are kind of under the radar that most people aren't talking about, and I think that even with the ones we've missed, I think these areas, these stocks within these areas are going to be important. So that's what I'm looking at. Next question I had was Bank of America, BAC. So Bank of America trading right now down 17 cents at 23.89. You see that the cup formation, that's what I was talking about. MACD isn't confirming it in the weekly chart. Stochastic popped up and then failed at 74%. That's the failure pattern that I'd be looking at, which we are not seeing in the daily QQQ series or the SMHs at this particular point. So, and the XLF hasn't been on a good footing right now. It's under the 9-period moving average. It's holding okay, but it's got that same cup failure formation. Does it make a cup and handle? Maybe we'll talk about that when we come back. Basil Chapman, Dow's down 46, S&P's hunch. I'll be right.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
We're back. Final segment. I forgot to go through gold. I was looking at the different currencies. Gold is trading up $4.5 at $12.46. Now, what's really interesting is, and one of the reasons why for subscribers we want you to have a gold stock in the portfolio, is that I like to relate it to the dollar, but I'm not doing it to the dollar one-to-one or other than just a short-term trend. The idea that the dollar can inflect and deflect and change the at least the near-term direction of gold. So the dollar pulling back like that, to me, is a very important thing, because that sharp pullback got reflected in the dollar, because the dollar was down at 12.34 on the 9-period exponential moving average, having made a peak B. All of a sudden, nice candle to the upside. That weekly chart is just so important tomorrow, not to give back and go back under 12.40. tomorrow, because that would not be good. What you want is to have even if just a slight push to the 1248, 1249 area, because the 9-period moving average, you want to go back above the 200-period moving average. You've got the 9-period moving up sharply. You've got the MACD expanding. It's still low, but it's expanding. And the stochastics at 69%. On balance volume is very good. You want to see this continue. And that's the reason why I think that we've got to watch gold, because if it manages to get by Monday or Tuesday, if gold is trading the 1253 area, all of a sudden, for the first time, the 1276 200-period moving average in the weekly chart becomes important. You've already broken this trend line support, so that's gone. That's out. Let's just get it away there. And now you've got perhaps you've got almost a fan type of expansion going on right now. That fan would indicate to me right here that the next level is right there. Yep, that's exactly what I'm saying. That if the dollar can continue rounding above the 1251-ish, no, I really want the 1252-ish area, then all of a sudden you've got some more upside potential, and that I don't want to talk about it. Let's just do one thing at a time. See if we can get above 1248. Okay, so that's the dollar. Now, the other thing I wanted to do is, within the context of the markets and within the sectors, my inkling right now, for instance, here's a good example. Alcoa, AA, trading at 36.71, up 21 cents. Earlier it was down to the 35.79-ish area, 9-period moving average close to that. Spiked up, pulled back a little bit. Is this one of those that I would be considering as a counter, because it's in the cyclicality of the economy? Is Alcoa doing well because you've got Ford, you've got General Motors? Look at this: Ford, General Motors, Fiat Chrysler moving very nicely to the upside. Fiat Chrysler right there in leg F. So is that helping? Is there a relationship? Those are the things that I want to be talking about. That's what we're going to, and I'll be starting to get into positions perhaps before the webinar, but the webinar is going to explain them, etc. And it's going to be very important. So go to the front page of TFNN, check it out. It's a two-part webinar. It's not just one day. This is a two-part webinar. So here's the other thing. Rider Systems had a spike to the upside, not an all-time high, but a spike to the upside in the daily. Goes to peak F, around about 75, trading now at 72. It's arching over. So when I try to put together different things, this is trucks and rentals, when I try to put it together in the whole smorgasbord of what we're looking at, it seems to me we're thinning out in leadership at this particular point. And that's the reason why we want to watch really closely to see what is happening. What can sustain leadership all around, or what's making it more and more selective as we spike to the upside, maybe in individual sectors, and even those sectors are seeing less and less leadership. So I hope you have a great weekend. Check in with me. See my opening call if you want to check in, see what it's like, and get a trial subscription, or sign up for my webinar. 2 webinar series, August the 2nd and August the 16th. 5 to 6:30, and the second one will be a lot more detailed.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.